can show you a crude play today. It's counter trend. And what I find interesting about the play today is although the bias was to the downside, it's very difficult trading with the trend. And all the opportunities were counter trend. I will show you the chart. And it'll be interesting to see whether some of you guys would actually take the play or plays. I think what's interesting about the result here to yourselves personally, it will provide a revelation towards your own trading identity. If you don't trade it, ask yourself why you wouldn't trade it. Or if you would trade it, how would you size it? What are your thoughts? What are your expectations? I think it's a very good chart for that, which is why I'm sharing it. So this is today on crude. And as you can see, we are trending down. And I traded this over here, and I want you guys to tell me why. What am I seeing here? Why would I take this? You'll hear a lot of people within the Wyckoffian trading world saying you don't take springs in a downtrend. And I always say, well, springs in a downtrend are actually a counter trend play and they're very beneficial. But I think they're just reeling off quotes that people have said in the past without actually understanding or trading springs or actually trading. Because we take any opportunity, regardless whether it's an uptrend, a trading range, or a downtrend. Although we will be aware of the trade's expectations, i.e. taking a bullish play, a spring in a downtrend, is obviously not as favourable as taking a spring coming out of accumulation. So oversold, good. Lower volume in the testing, good. Okay, well done. Locally climactic, good. The demand line has produced rallies. Okay. Do you mean demand lines? You mean these? You mean the oversold demand line from the trend channel? Yep. Okay. Kind of climactic holding oversold, spring of local support. Good. You guys, wow, you nailed it. Although there's one aspect. On the way down, there is something I was noticing. When this printed on this bar, as we're breaking down, then we apply the parallel. Okay, we put it from here. I put it from here. There were lines in and around here, okay? Because as we break here, then we have the right to kind of apply these channels in a sense. So then when that slams down into this level and that kind of volume, would we be thinking climactic beforehand? Yeah, we would, wouldn't we? We rally up, we come down, we get this very poor buying on this bar, but then we dip down and then we do spring. And it is a spring on lower volume than the anchor point. Now, the question is it a good spring? No, this is not a good spring, is it? However, it's the background that tells me to take this spring. Why? Well, this spring rallies. This spring is poor, rallies. This spring rallies. Technically, that is a little hidden spring. It rallies. So in this instance, when we have the potential for a climax, and then we get a spring on lower volume than the anchor point, I might add as well, isn't it worth taking that every other time we've had a spring in this downtrend, that we've had a rally? It's very simple, bit of the analysis, but we've had 1, 2, 3, 4 springs previous to spring 5 with the adage of a potential climax with the highest volume at this demand line. Now we have all the pieces of the information here. Who would take the trade? I know we can see this pans out. We're not going to go into the trade management. Someone said they wouldn't have taken the spring, and I agree, it is a poor spring, but I've tried to provide you the rationale by saying that every other spring in this downtrend has worked out thus far. Plus, we have the adage of a potential climax, which hasn't happened previously. So you have to join the pieces of the puzzle together, saying that when or if that occurs, you have to take it.